decline in April to a 40.5% decline in May. And international developmental licensed markets and corporate restaurant segment, which includes China, Japan, and Brazil, saw same-store sales sink 32.3% in April and then just 20% in May. So sales are starting to make a comeback here. 95% of all McDonald's stores
What's up, chat? What's going on, y'all?
Operating, and McDonald's management is planning to participate in the
Things are looking good today.
virtual consumer and retail summit at
better than
So in addition to this SEC filing
past
that
couple
we
of
got
days.
this morning, we're expecting CEO Chris Kaczynski to really outline some more details when it comes
to what's up, Prop?
that they have seen.
How you doing, man? I've been playing some Dota.
Did also,
the market's finally open.
In the statement saying, quote, our strong
I'm gonna take a look at some of these things,
advantages of the McDonald's system,
and then I can explain to you
percentage of drive-through restaurants
how
and investments in delivery and
I take care of business in these markets.
Presented by the COVID-19 outbreak. Now, a key
Give me a second. Alexis,
will be whether or not McDonald's will keep its limited menu, as we've seen competitors like Burger King introduce new items even amid this pandemic. So those are some. What's up,
Shotgun Forex? I do know how to trade Forex, but I'm trading stocks. I'd rather trade stocks than trade Forex. Stocks are better for me, man.
Are not as strong as what we're seeing.
There's too much other stuff.
Look at Papa John's putting up
into
Forex sales gains. And do you think one of the takeaways is that it will be some time before McDonald's does go back?
What's up, Proclin, man? How you doing? So
yeah, Brian,
when I was showing you how to trade earlier, or I was explaining to you earlier, I was explaining to you something. Let me turn the chat down, the little lady down real quick. All right. Big ups for doing this. Salute. Yeah, man. Hey, you know what I mean, man? I'm always trying to make another dollar out here, man. I'm always trying to make dollars out here. Remember back in school, I used to sell candy. I used to go to Sam's Club, buy the boxes of candy. Bro, you gotta make money out here in these streets. All right, but anyways, Prop. So what I was trying to, explain to you is when I trade, man, I trade something called support and resistance, right? So what I'm gonna do is I'm gonna pull back the chart to 2 years so you can get a good idea of what I'm talking about. All right, so don't look at this too much, this area. Okay, so obviously I'm looking at the daily chart. Some people trade on lower time frames, but right now I'm looking at the daily chart. So each one of these candlesticks is a day. It's a little bit small because it's zoomed out for 2 whole years. So this is 2 years. Each one of these sticks is 2 years. So what, 700 and whatever days, 700 something days, whatever. So basically what I do when I trade is I do something called support and resistance lines. So what that means is, like I was trying to explain to you earlier, was support levels are area that it struggles to go past going down, and resistance levels are area that it struggles to go past going up. So for example, I'm gonna look at the past history back here. So here I would draw a line here. And it's not gonna be perfect, by the way. It's gonna be like an average area. And then I'm gonna draw another line about here. So as you can see on this in this zone, that when it comes here, it comes down. When it comes here, it goes back up. Comes here, it comes back down. So, what I do is, obviously, when I notice that a pattern that it does this, is I'll buy down here and then wait for it to come up. You see what I'm saying? And come back. And when it come up here, I sell. Then when it comes back down here, I buy. But obviously, it's going to take a while before it comes back down here. So when it comes down, what I do is I look for another stock that's already down, and then I buy that stock, ride that up, and then I take this money out and I look for another stock. So that's why I have so many different stocks. Obviously, in the middle of me doing this, the market crashed. That's why I'm losing in these couple of trades, but it's no big deal for me because I know it's gonna come back. You know what I mean? Sometimes it just takes time to come back. Sometimes I do win overnight, but sometimes I have to wait. You know what I mean? But at the end of the day, I'm gonna make way more money doing this than the job. Hello, what's the best version of FL Studio so I can make my own I don't do music, bro. I'm not a music guy. I'm a programmer, but I don't do music. Is this Robinhood? No, this isn't Robinhood. This is my bank. I have a bank that I do, but I do have Robinhood though. I do have Robinhood. I do have some stocks in Robinhood. Well, this is my main. You know how you guys got that main? This is my main right here. The only reason why I got Robinhood is because a few stocks that I couldn't get on Robinhood. I mean, on my bank. That's why I got it to Robinhood. No music. Listen to VR. Listen to bro dropping knowledge. Oh yeah. Listen to bro. Yeah, I got you. But yeah, nah, I'm just trying to teach my people how to trade and make some real money, man. I mean, you can make a good bit of money doing this stuff, man, just as long as you don't get impatient, like what I was telling you earlier, man, you got to focus on winning the trade. And once you win the trade, then you can start talking about how much money you want to get. I mean, until then, you got to figure out how you win because you want to build that consistency. And then after that, I sold my shares at the highest price I saw. Yeah, so and now I'm not sure what to buy right now. So I use Robinhood. I haven't got these kind of platforms. What's the name of this? So for you, Procland, I'm not sure what to buy right now. So normally what I do is obviously everything's in green. So what you have to do is the market never goes in one direction. So what you have to do is you have to either A, find the biggest loser, or B, wait for a pullback, either or. So a pullback is what happens is, for example, you know how you said you share at the highest point? If a million people share at the highest point, the company loses money, obviously, right? So what happens is the price comes back down. And then when it comes back down, people buy in again because the price is cheaper and it comes back up. And it's a constant cycle. So either you can find the biggest looters, which is like, obviously a lot of people went up today. You've seen it, right? So if you come, well, I'm using this platform right here. So if I'm looking at the biggest losers, I can look at companies that didn't come up today like everybody else, and I can jump into those companies. But obviously, you want them to be either name brand companies or companies that that's not going to go bankrupt. But I think people that made it past this point is going to be good because I think most of the companies that is going to bankrupt is probably already been bankrupt. But I don't know yet. We'll see. But like for example, Spotify. Everybody knows Spotify, right? So this is a loser for the day. So I'm going to zoom in on the chart a little. So as you can see, remember when I was telling you about support and resistance or whatever? So what I would do is I'll mark these two zones like that. And what I'll do, I'll mark these two zones like this, right? So right now I'm looking at the chart. So this is May 20th, right? And the day is the 16th. So when you do this, it's like, the last time it's been this low was May 19th. What are the odds that it's going to go this low again? That's the mindset of all. So I said, okay, well, if that's the case, when it gets to 177, I'm going to buy. Boom. I mean, this is just an example. Obviously, you don't have to choose to stop. Once it gets to this line, I'm going to buy. And if it comes back up here, I'm going to sell. If it doesn't, then, sometimes it happens. You see what I'm saying? But the chances are great. You know what I mean? Like when you have an average area, so you got to wait till it does it multiple times. Maybe I usually say 3 times. 3 times is enough for me to get confirmation that it's going to do the same thing again. You know what I mean? I use Robinhood. I haven't gotten this client. This is my bank. I got Robinhood too, but this is my bank. Because my bank, I feel better with my bank. Robinhood's good though. Like I said, I got Robinhood because of there's a couple of stocks that I can't buy with my bank that I would buy here. I might wait for everything to go down to buy again. Well, see, like I said, you don't want to wait for anything. You always want your money to be, well, you always want your money to be circulating because like I tell people all the time, there's this thing of too much money. I know that sounds dumb, but what happens is if you have a lot of money just sitting in the bank doing nothing, not doing or gaining bank interest as well, a penny a month or something like that. So there's always something that's low. You just gotta find it. You know what I mean? And obviously, not only find it, you have to do research to make sure you going in the right direction. You know what I mean? If you can trade during a time like this, when coronavirus is up, then you'll be real good at trading. Because I started to learn back in February. I mean, I've been investing, but I haven't been trading. It's different. Investing is when you buy something, you hold it for the long term, expect the price to go up. Trading is when you obviously buying high, buying low and selling high. But there's always something that's low, man. If you look at I'm gonna show you some. I'm gonna show you something real quick. Hold on, I'm gonna show you this website, right? Let me main capture display. Have you seen markets more bearish or bullish than this pandemic? Hold on, I'm gonna get to you on that one. Give me 1 second. Let me show you something. So this website right here, it's called marketcommunion.com. All right. So when I'm really, really, really trying to find something to get into, what I do is I look at this website right here. What happens is companies release what they call earnings reports. Right? So what happens is when the earning reports come, usually, not all the time, but usually the market either shoots up or shoots down. And if the market shoots down, then you want to look at history and see what happens when the market shoots down. And that's a good opportunity to buy. For example, Oracle, right? Oracle, or you know what? I don't know if you know what Oracle is. I'm to find something that people know. I know what Oracle is, but let me see. Let me see. Let me try to find something that people know. Okay, H&R Block. I'm sure you've seen those commercials. H&R Block, right? So H&R Block today is going to release earnings reports, right? So when that happens, the price is either going to shoot up or shoot down. So what I'm going to do is, hold on, let me go back to something again. Okay. What's the ticker symbol for that? HRB. All right, so I'm going to type in HRB, right? And I'm going to zoom out. What's this? This is March. I'm not going to really look too much in the March area because this is coronavirus, right? So I'm going to zoom out to about 2 years. It don't have to be this far back. I'm just trying to give you an example of what's going on. So as you can see, when the earnings report, this is E is earnings report. So when this happened, it dropped. When this happened, it dropped. When that happened, it dropped. It's a constant pattern. Every time the earnings report comes out, it drops. So what's going to happen is when the earnings report comes out again, it's going to drop, right? So I'm going to zoom in. So normally so today is earnings reports day, right? I think it's going to open up. It's going to release after the market when the market closed. So what I'm going to do is I'm going to wait for it to touch this area, an area where it struggles to go past. So let's say about this area right here, right? Why? Because as you can see, when it came here, it came back up, and then a couple times it bounced up here too. As you can see here, it could come here, but I'm not certain. The reason why I'm not over here is because this is the initial scare of the coronavirus. Everything did this, so I'm not going to, look at that. So let's say I want to invest. It depends on how much money you're trying to spend, but let's say I want to invest $5,000 into this trade. What I do is I invest two and some change right here, and let's say it does drop here, and I'll invest the other $2,000 right here, 250 right here, right? So what happens is when it comes here and it comes up, when you get to about right here, you're already in profit because of this trade you got in, and then when it comes back up, obviously you're making a lot of money when it comes back to where it really was before it dropped. You see what I'm saying? And then you cash out. That's a good way to make the money. Earnings reports. I have it right here saved from when I'm really trying to find some money. There's a lot of different ways you can do this. You can do that, or you can look at the biggest losers. Earnings report is good because the biggest losers show you companies that you may or may not know. Earnings reports. I know Oracle because I know that's IT. I know about IT stuff. H&R Block. That's a big time. You see the commercials on it. Groupon, another one. Turtle Beach. I think that's the people who makes the technology equipment or whatever. Like the headphones. I think that's who they did. I'm not sure. I have to listen to it. But not only that, you can look at the market cap. So the market cap is how much money the company has. So when you have something with a large market cap, like 172 billion, the company's going to do well. I mean, besides, obviously I know the history behind oil. You see like $2 billion, the company's going to do stuff like that. You just know. Have you seen the markets more bearish or bullish during this pandemic? Bearish because nobody got money no more. You know what I mean? I mean, traders got money, and we don't care. But the average person who don't trade, they don't have any more money. So some of them take their money out because they need money to pay bills. A lot of people got laid off. You know what I'm saying? Like us as traders, we're just buying and selling. We don't know what's really going to happen. I'm just buying and selling. I mean, obviously, I'm not worried about if they coming out with a cure for coronavirus or not. If it's low, I'm buying. If it's high, I'm selling. That's just the bottom line. You know what I mean? But investors, on the other hand, they care because they're running out of money, and when they hear a cure for coronavirus, they load up in the markets because they want to make some money. But obviously, you're still gonna have a couple of those stocks that's gonna do good, because either people buy the stock or companies buy the stocks. For example, I don't remember the stock off the top of my head, but because of all the riots been going on, the people that makes the police gear and all of that stuff, uh, their stuff was going up. Like their stock was going up. The people that make the riot gear and all of that stuff has been going up. Eli Lilly, I'm about to I'm about to sell this in a little bit. Hold on. Where is it at right now? 161. Actually, I'm gonna sell this. Hold on. 1 second, chat. Let me get my money right. Boy, I gotta get right. All right. I want to sell this. You see this right here? I marked this line because I noticed that it struggles to pass this. I mean, yeah, it could pass this. I'm not gonna say it's not, but let's say it comes up and come back down. I wish I sold it. So I'm gonna sell it now. You know what I'm saying? Sometimes I sell it and be like, well, it went up, but that's all part of the game. You always gotta secure those profits. Secure those profits. IW. I don't know what you mean. Let me make sure I get this right. I'm gonna sell it at 161. 61. Good to cancel. Um, I would love what to do this, but the interface look intimidating for new investors. All right, so it's not as bad as it looks, man. I'm gonna show you. I'm gonna see. All right, you're gonna be like, "Damn, that easy?" Okay, so anything you see new is intimidating. All right, so it's like having a job. So it's not that hard, honestly. So what happens is, hold on. Okay, so I'm gonna explain to you what I did, Proc. I'm gonna explain to you. So what happened was on the left, these are the trades I'm in. That's why you see this here. Watch list. These are the stocks that I'm keeping my eye on. You see what I'm saying? Like name brand stocks that you're keeping your eye on, like United Airlines, Zoom. The video chat software people using. This is oil, U.S. oil. You know how they were saying that the oil was like a penny or something like that one time, or people fight over oil, so it's a good thing to keep up with. I'm actually in oil too on my Robinhood. This is Wells Fargo. These are like big time companies. I keep my eye on Tesla, Caribbean, Carnival, Macy's, Southwest, Coca Cola. These are my big time companies. It's just organized to the way you want it to be. You see what I'm saying? So to make it easier for you, this right here is the stocks that I keep up with. You see what I'm saying? These are the stocks that I keep up with. The bottom left, these are my open orders. You know what I mean? Like as you can see, this is Eli Lilly, a medical company, right? I bought into this at 151. I'm taking profit at 160. I'm taking profit at 161, right? So I have the sell limit right here. So when it touch this line, it's going to sell this trade, right? That's why you see this on the left. Sell Lilly, 12 shares open. So what's going to happen is if it hits my line, it's going to say executed. You see what I'm saying? Like for example, American Airlines, I sold 165 shares at $18 executed. That means it's done. Delta Airlines, I sold that at I bought that. These are shares that I bought. You see some of them sold. I didn't realize it said buy, but hold on. There's some that I buy and there's some that I sell. This right here shows me what it did. See what I'm saying? Here, this is just all the stocks in general. You can organize it by the biggest winners, losers, volume, how many trades been done, all that stuff. So like, it just helps me keep up with what I'm not looking at on my watch list, if that makes sense. So if my watch list isn't showing me anything, I look on this side to see if I'm missing anything on my watch list because the watch list is custom to you. I customize that. Right here, this is just everything. And then of course right here you got the chart. You know, this is right here. I don't really look at these. I'm gonna remove these actually. Well, like this is like the RSI. These are just different indicators that people use. Everybody got trading strategies, and even though I trade support and resistance, sometimes you do stuff like this for confirmation. That's all. But I actually don't really need this because I know how to. I'm actually gonna remove that right now. Um, and then, obviously that's the basics right there. You know, these other tabs, these are like this is just my bank. My bank have other stuff for here, like technical analysis. Um, this is just stuff that goes on with you know they're just telling you what people think about the trades and what's going on. That's all this is. Then you got scan stocks. This is scan stocks. So um my bank will tell me if this is a good buy or not. You know what I mean? Like even though I have my own reason to buy a stock, the bank also tells you what they think about the stock. So as you can see, this one Bank of America is saying, "Hey, buy this stock." I mean, even though I've already bought it, but now they're saying, so I mean, it's a pretty good thing that it's a good thing. What's this do? Oh, this is the range chart. So some people do day trading. Day trades are people who get in and out the market really fast. So this will show you the same stock, but different time frames. So as you can see here, this is the 1 minute chart. This is the weekly, and this is the 10-year chart. That's all that is. This is options. People trade. I don't trade options. I don't even know how to trade options. So, but that's what that is. This is ETS. You see what I'm saying? Indices. Earnings. Well, this is a custom tab. So you can make a custom tab. So this black screen that you see right here on the right, it's not black, but it's black for you guys. But it's all of this is the earnings calendar that I was showing y'all earlier. That's all that is. But it's not as bad as it looks, man. It's like once you organize it to the way you want it to be, then it's easier. What's up, Wasabi? How you doing? See this right here? Eli Lilly is shooting up right now. If that thing, all I wanted to do is hit 161. I don't care about nothing else after that. If it crashes, that's on them. You know what I mean? If it shoots past it, then I just miss it out. Does news social? Yep, it does. Does. So it does. It does affect it, but as long as you got a good entry, you should be fine. For example, um, I'm gonna come back to Eli Lilly so y'all can see that one. American Airline, right? I ain't gonna lie about this one right here. I kind of just jumped in this one. Why? Because the price shot up, right? So I bought down here at I don't remember when I bought in at, and then I sold about at $18, as you can see earlier. I sold at $18, okay? And then it came back down to here, where my price is at right now. Remember when I told you guys I said I need at least 3 taps so that could be my confirmation of it being the bottom. Since that happened all in one day, I was like, man, I don't want to miss out on anything. So what I did was I zoomed in on that area, right? And I looked at the hourly time frame, right? And I was like, it looked like it does struggle in this area, so maybe I should buy here. So I buy here and then it drop here because of the Fed and the second wave. I don't even think it's the second wave because nobody cares about coronavirus no more. I mean, in such a way, like think about it. Back when coronavirus happened, and I said 10 people died, I was like, damn, 10 people died. Now we used to seeing people die now, so it ain't nothing new no more. I think what really sparked the drop here was when the Fed had made an announcement and caused people to get, what happened was people took their money out because they wasn't sure what was going to happen, but they ended up putting it back in. That's why this is going on now. But like, if the news pull up right now and said 50,000 people died from coronavirus, we're gonna be like, oh, you know what I mean? Not to say the reason why behind it is because we're used to it now. We've been doing this since February or January. Well, really November. It depends on how technical you want to get because China's been dealing with this since then. But for us, we've been dealing with this for February, right? So if the news says, yeah, 10,000 people died, we're like, oh, okay, that's it. You know what I mean? I mean, because we're used to it. It's got to be something else that changes. So when the riots started, I thought the price was going to drop. but it didn't. The price kept going up, and I think it's because of traders. But I'm not sure, you know. So the only thing I can do is trade on a good support and resistance level because, like I said, I got in right here because it was a good support level. It wasn't the best because I didn't do it on the daily chart, didn't do the hourly chart, but it broke past it, and I was like, damn, you know what I'm saying? But now it looks like it's trying to come back up. So we're in good shape. We are in good shape. What's this one look like? Eli Lilly. Let me take a look at this and go back here. All right, so Eli Lilly is looking good. If it touches my 161 mark, that's my money coming out the markets, baby. I'm waiting. It's all about being patient. Sometimes in these trades, man, like let me see, when did I got in this trade? June 2nd. So sometimes you can get out a trade in a day. You know what I mean? Sometimes a week, sometimes months. It just depends on when you get in and how good your entry was. So I've been in this one for how long? I've been in this one, and this wasn't even a good entry. I kind of jumped in this one because the market was going up, and you know, I was like, man, I don't want to miss nothing. But that's why I got in this one. But even so, still good, still good. Everything's good. Like even though it took me a week to get out this trade, it's still good money, good profits right there. And that's a week to get out the trade when the market crashed. You know what I mean? Imagine if it didn't crash. I'm back. I had to step out for a second. Let's see. Is the best time to buy when the market crashes? Of course, but you don't know that. It's a thing. Can you speak more on candlesticks? I love. Oh yeah, 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 yeah. So that's another big thing. So obviously you're never gonna know when the market's gonna crash. That's just something that you're not gonna know. Which is why I like stocks more than forex. Because for example, um, you know, I put a lot of money in these trades, man. Like, you know, between 5,000 to 10,000 per position. You see what I'm saying? So when I say per position, that means per trade. You know, it's like sometimes, I'll give you Eli Lilly for example. This was a good one for me. Um, that's why I bought twice here. But usually, what I do is, like I say, I measure the support and resistance level. So let's say I spend about $5,000 here, right? And I'll mark the next support level, which will probably be somewhere around here. I'm just making something up, right? And I spend another $5,000 here. And the thing about it is, forex, if you keep your trading overnight, you got to pay. And then they don't always come up. Stocks, on the other hand, if they're, like I say, if they have a real good market cap, or you know they got a good company, sometimes you just gotta wait. That's just that. Like for example, Carnival Cruise Line, number one cruise company in the world. If you buy that and it crashes, this is number one cruise company in the world. You know they're gonna come back up. I mean, I don't know how long it's gonna take for them to come back up, but you know they know they're gonna come back up. So you're not gonna know, you know. So normally, like what I do is I mark the lowest area, and, and then I'll buy on that low. And if it drops and crash, then I'll buy on the next low. It's just that, and then you're gonna be glad you did it. Can you speak more on candlesticks? Yeah, sure. Okay, so I like candlesticks. Why? Because depending on which time frame I'm looking at. So, for example, the daily, right? So yeah, so Proc, I trade candlesticks. Remember, I was telling you about that instead of the actual line. Let me find it. Where am I at? 1 second. Let me hold on. Let me fix this up so you can see what I'm talking about. Why does not let me change it? Let me see. Oh, here. So yours probably looks like this, or your Robin Hood or whatever. So this doesn't really tell me anything. I mean, yeah, it tells me, yeah, it's going down, it's going up, it's going down, it's going up, right? That's cool and everything, but I like candlesticks because when um when every candle, like right now, I'm looking at the daily chart. You can look at anything, the hourly, the minute, whatever. What happens is it'll tell me the highest and the lowest point that it's been during that time. That's why I look at candlesticks. You see what I'm saying? So, for example, if every one of these candles is a day, the top of that candle was the highest it's been, bottom of that candle is the lowest it's been. You see what I'm saying? So, if it's green, that means it's going up. Obviously, if it's red, that means it's down. If it's closed red, that means it closed down here. If it's green, that means it closed on the top side of the candle. But it still tells me where it's been that day. Like for example, that's how I mark my support and resistance levels, because if I zoom out from uh April 17th to today, on average, I mean I'm on average now, like I said, it's not gonna be perfect. The average area was 161, which is why I'm taking out. And that's the area that it has been at on average. Highest on average. Yeah, of course it did tap here, but you know what? Once, you know what I mean, within the past month, you know what I'm saying? Like, you know what I mean? And what I do is I mark the top of that candlestick, which is what this line is now, and then I mark the bottom area, which is the part that it struggles to pass. You see what I'm saying? And that's why I bought on this line, because it struggles to pass it. See, I bought this day right here. So yeah, it passed it once, but that's once out of a whole month. You know what I'm saying? So that's why I bought here. Now, obviously the market crashed, but even after it crashed, it went from here yesterday to here. So I mean, that's a big jump. You know what I'm saying? So I like candlesticks, man. That's why I like it. Everybody got their own way around it, and strategy. But that's mine. I'm zoomed in on Eli Lilly. Let me check this one. Oh, let me check this one. Make sure this one good too. This one still got some ways to go. Eli Lilly. So this one, I'm gonna keep my eye on this one right now. I'm sure it's gonna hit my line. I don't know how long it's gonna take. I'm sure it will. Can you explain what's options? All right. Options. So let me see. Normally, so do you buy? Are you in forex or are you in Robinhood? So I'm trying to figure out that way I can know how to explain it to you. I know you said you was in Robinhood, so you buy and sell stocks, but I didn't know if you was doing forex too. Oh, come on, tap that line and get me. I'm trying to get paid. Get me out here. You see right here when it says open on the bottom left? When it taps that line, it's going to say executed instead of open. Robinhood, but we travel, so forex is interesting. Concentrating that, man. I don't really like forex like that, but I mean, I do know how to trade it though. Hold on. See, it's about to hit my mark. It's about to hit my mark. Is it gonna pay the bills? or is it gonna leave me hoping for another stimulus check? Let's see. I'm gonna see if it hit my mark first. Once it hit my mark, then we good. Come on, man. Just give me my penny, yo. There it is. There it is. Execution. Right there. That's it. I'm already out. See, executed. 161. All right. I'm good now. That's my trade for the day. So if it comes back down, I'll buy until then I'm leaving it alone. You see that? Y'all saw that with y'all's own eyes. I bought in at what price did I go in? Hold on. 151. Yeah, I bought in at 151, so 161. All right. Anyways, so I'm done with that. All right, so um options. I don't do options, but so the thing about Robinhood, okay, so another thing about Robinhood is there's something called, so obviously people don't really know this too much. You know, you buy your stock, or some people might say go long, and then you can sell your stock, right? Which means you get the profit from it, right? But there's also a word called short selling, right? So what happens when you short sell is you bidding against the market. For example, this one hit the line that I was telling you about, and I'm expecting it to come back down. So if I want, I can click sell right here, right? And what will happen is if the price goes down, I'm going to be in profit. If it goes up, I'm not going to be in profit. It's called short selling. It's bidding against the market, right? So sometimes you hear something called a bid and ask price. You know what I'm saying? An ask price is the price you want it for, the price you're asking for. A bid price is, you think it's going to go down, right? So in Forex, you can short sell as well. In options, you can short sell as well, but it's called put and call options. You see what I'm saying? So when you're doing a call play, you think it's going to go up. Put play, you think it's going to go down. So for example, I'm in Eli Lilly, right? So what's the price of Eli Lilly? 161, right? Um, let me make sure I'm in the right stock. All right, so for example, let me make sure. Price. So I believe, if I know correctly, I think what happens is bidding, still bidding, but you have a contract, right? So for example, this one says 3 days until expiration, right? And what happens is you're betting that it's going to go to a certain price, and if it does, you make money. If it doesn't, you lose money. That's what that is, and that's what options is, So call is if you think it's going to go up. Put is if you think it's the reason why I don't trade options, people make a lot of money trading options. Don't get me wrong, but the reason why I don't like it is because if I lose money. I mean, but unlike stocks, I got here and it dropped down. You have to wait up eventually. Options, you have a certain amount of time. Like for example, you can have a contract, like I said, 3 days. So basically, you had, but obviously, contracts are different depending on the trade you're in. Like this one, 3 days is expiration. So if it don't do what you say it's gonna do within 3 days, you lose money. That's just fine. This one right here is 10 days. If it doesn't do what you say it's gonna do within 10 days, you lose money. It's not a bad. Don't get me wrong. People make money all the time. It's just I don't. I don't know, man. Like the thing about me, man, is I don't like to lose money. You see what I'm saying? Like when I'm trading stocks, on the other hand, it's just a matter of time. What's some good information though? Let's see what this one says. Oh, it tells you. Like I don't trade options, so hmm. Yeah, so I mean, I don't know. I just like at least what options if you lose, you lose, man. At least with stocks, if I be patient, I'll be alright, you know. Damn, Eli Lilly shot all the way up. I took my bread. I'm out. Your boy is out. So options is better against the market. Correct to say. No. It's not betting against the market. Options is basically saying, I bet you. I'm gonna show you. Options is basically saying, I bet you this is gonna happen by this date, and if they don't, you can keep the money. Like for example, I'm gonna use Roku. It's Roku, you know, the thing that you put in the back of the TV to watch movies. So basically, it's like this: you give me $500, right? And if it goes to 130, I'll give you $500. You see what I'm saying? So, oh well, let me rephrase it a little bit. So if this goes to 130, right? Um, I'll give you at $500, right? And that's basically what I'm saying. If it don't go to 130 by X amount of day, you give me $500. That's basically how that's working. Or you can say, no, I think it's gonna go to $81. And if it don't go to $81, then you know you still either win or you lose money. But either or, you can bet and sell against the market on anyone. So I'm gonna show you an example. So I'm not gonna do it on one that I already have because it's gonna be different. So let's see. I'm gonna try to find a stock that's just straight losing right now, so I can show you what I'm talking about. So sell, right? Let me see this. Oh, this is too cheap. Hold on. It's gotta be a company that actually has money. All right, so this right here. No, that one that looks a little. All right, I don't even have to, I'm not going to execute the trade. So, for example, sell short. So, sell is when you're selling the stock that you bought. So if I bought 10 shares of this and I want to sell it, that means I want to sell the 10 shares, right? But I don't have no shares in this. That's why I just want to highlight it. You know what I'm saying? But I can sell short is when you think the market's going to go down. You're bidding against the market. So, for example, if I click sell short, it's going to pop up and ask me for how many shares. Same thing as you go up, but you think it's going to go down. So if it goes down, you're in profit. Up, negatives. You see what I'm saying? That's all that is. But you can do that on any one, though. You can do that on any one. Robin Hood. I got a lot of stocks on Robin Hood too. Hold on, let me check my oil stocks. See this one right here, my U.S. oil. I got it at $20.77. It's $28 right now. Let me zoom in a little closer on this. Okay, we good. I got it at $20. It's at $28, right? This one right here. Oh shoot. I got it at $21. It's 29, so we in profit there. Let me check this other stock I'm in on Gush. It's another stock I'm in. I got in at 37 and it's at 47, so we're good there too. This one right here is a company that they say they're supposed to come up with a cure for coronavirus. So that's why I got this chart marked up. I mean, I don't know if they do something, if they come back down. See, I ain't gonna buy it as you can see. What's what called the company? Which one you talking about? Oh, well, there's a lot of different ones, man. There's a lot of different ones, you know. Eli Lilly was one of them. Eli Lilly was one of them, which is why it shot. Well, let me 1 second. Let me share my screen again. All right, so this one right here, right? Eli Lilly. This is one. There's multiple because they compete with each other. They all compete with each other. So Eli Lilly, right? So don't tell me it froze. 1 second, hold on. One second, y'all. I think my don't tell me it crashed, man. On chat. I know how to be in these streets sometimes, man. They don't want a brother to make money, that's all. Hold on, let me restart my platform, y'all. All right, this might work. All right, we good. We good. We good. All right, all right, all right. Let me check my chat again. All right, so the one that's supposed to, there's a lot of them that's trying to cure the coronavirus, man. They all talking about curing coronavirus or whatever. So they competing against each other. But let me see technical analysis, scan stock. All right, look. This is one of them. They were talking about this one a long time ago. I bought a couple shares for a company that's supposed to cure it. Hello, man. Go LBO. So I don't know. I don't know what that is. What's up, MC Ferrero? Though? How you doing? Elbow Spa. I don't know what you're talking about, bro. But yeah, there's multiple companies that's trying to cure it, man. They all competing against each other. But I bought this one because it had a good entry. So I went in, and then obviously today it went from here to there in 1 day. And like I said, remember I told you this is the average area it comes back down on, and guess what happened? Back. Good thing to see. That's what I'm saying. Good thing I got out. That makes sense now. You seen it in action. I'm here. Good morning. What's up, bro? What's up? What's up, bro? Good morning, man. Let's get this money, man. We out here. I just got out this trade right here. This was a good one, man. We went from here and it shot up all the way up here, and I took profit at 161. That's one of the trades y'all missed. But yeah, Franklin, what's your company that you were referring to that's supposed to carry it? Give me like the ticker symbol. The ticker symbol is like the 3 words or 4 letters, or 3 letters or 4 letters. CPRX. CPRX. All right. So the first thing I'm gonna do is zoom out on the chart. Boom. Right. I'm gonna go back to about a year. Boom. So I want to mark some areas that it struggles to go past, which is boom 1, boom 2. That's one area. And there might be a couple of them in here. Let's see. That's the first thing I'm gonna do. This is the 1 year chart, right? I'm gonna zoom in on the 180-day chart so I can get a view of what my arrows is doing. So you said you bought a couple of shares of this, which is in price. If you bought down here, then you're golden. This was the perfect entry right here. And then you can probably sell here. It might come up here. I don't know. Depends on the news. Like this is just based off me. I don't even know if it's a good company. I don't know anything. This is just me drawing up a chart.
Thank you, Senator Reid.
Oh, thank you very much.
You mentioned the stimulus earlier. Give us a scenario for a new day trader of how much of that would you invest with the beginner info where you can start making profits, and how risky would you be willing to get? Hey man, listen, bro. Anything you need me to do, I got you, bro. You my boy since you been my boy for a while. Man. I'll do whatever I can to help you, bro. So the first thing I want to do, let's see. If I had 1,200, let's see. Let's take a look. This one was one of my favorite companies too, right here. Hmm. Let me look at some losers, man. Hold on. So normally I look at earnings reports. I don't really see nothing going on. So I'm gonna see if I can find some losers. That was a loser. Why is this losing so bad? I need to find out why. So I'm gonna pick my screen back up again. All right, so this one's a loser right here. Now I keep my eye on this one. If this one touches $12, I'll load in. I think I had a mark for this one for 11. But didn't touch it at all. 11.75. So I'll load in about right here. Um, why? I'm gonna answer your why right now. The why is because, well, first of all, I need to figure out why it's dropping. I think it should drop because people are selling. think that's why it's dropping. But let me double check. I'm gonna make sure. Nothing serious, as you can see. Hold on. Nothing serious happened. Nothing serious. Nothing serious. This is so what I did just now is I right click on my chart to see the news. You know what I'm saying? So I'm gonna let the market run a bit so I can do trade. What you mean you can't do trade? But yeah, so the first thing I want to do is I want to see what's going on. Like nothing serious, like nobody killed nobody or somebody. You know what I mean? Like oh yeah 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 PDT rule. Yeah, man, that's what I was trying to explain to you before. But yeah, so I wanted to make sure nothing went down. Like there's always somebody at bankruptcy. You don't want to hear stuff like that. But so I'm gonna exit this out. Nothing serious happened, right? So I think what happened was people sold. That's just all it is. So I think this is a good spot because hold on. You know what? I'm gonna pull up a different platform for you. Give me 1 second. All right, Proctor. Remember this website right here? Oh yeah. So Shaka, this is another good website that I used to use right here. I still use it though. So let me clear off the chart so you can see. All right, so this website is called TradingView, right? So this one I like to look at as well. It's a good chart to look at. So and the reason why I would get into on this one because there's a lot of different reasons why. The first reason is because I'm gonna pull up the monthly chart, right? Okay, so actually I'll do the weekly chart. The weekly chart. So this company became on the New York Stock Exchange back in 2008, right? Brand new company, right? Actually, the company started in 2008 and then got on the market in 2018. So it's a brand new company, right? So when the coronavirus happened, the initial scare caused everybody to shake out the market. You see what I'm saying? Um, and what happened? Well, yeah, yeah. The thing about my interface here is because I can see everything in real time, every stock, not just the one I choose. You know what I mean? That's why I got it like. But anyways, when the coronavirus initially happened, I'm gonna zoom in on this so you can see. Obviously, this is the coronavirus, right? Boom. This is the coronavirus, this area right here. So a lot of companies danced around this area before they came up. This company came straight up. So a brand new company that can do that, that shows me, wow, this is a good company to invest in. I mean, obviously you can trade it too, but also, it's a good entry would be for me. So if you draw this line, I'm gonna draw a line from about right here. Boom. This is a trend line right here. Right. Boom. That's a good trend line right here, right? So you can look at it from that angle, or you can look at it from that angle. So what you see here is what I did was I draw a line from the bottom all the way to the top, and I connected all the bottoms together. You can do that same thing with the top area, so you can see what's going on, right? And what happens is normally, as you can see, this is a pattern. Boom, 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 right? So I'm expecting that to pull back down in this area. I explained to you why I drew this line, right? And I drew this line because this is another area where it struggles to go past, coming back down. So my perfect entry would be around the $12 mark. You know what I'm saying? And it's worth it for me. You see what I'm saying? Why? Because it's on the uptrend. It's a support level and the history. So I actually bought in this one back when it was $10. I sold it already when it hit $12. You know what I'm saying? But if it tests back down here, I'll buy more because I just sold my profit from the other trade. I can get in on this one, but I have to wait for it to come down a little bit more. This is a good one to be in. So and it's good, nicely organized. Like for example, if you remember I was telling you about going long and short positions. buying to go up and short selling to mean it's gonna go down. You can set that stuff up here as well. Long position, short position. So this one right here, I've already got out. I'm good now. So, and I'll show you that I got in on this candle on this date, July 11th, and I took profit on this date when it tapped that line. Just, enough to show you what's going on. Because sometimes, I used to trade, instead of showing this interface, I used to show this one. That's what I used to show. I do like this one a lot better, though. How can I get in touch with you on Facebook, Messenger, on IG? I'm trying to follow, but I'm just a beginner. Just a few weeks ago. What's up, bro? Hey, Skeeter Season TV. Check out the description, man. I stream on basically every platform you can think of: Twitch, Facebook, YouTube, and Mixer. So I mean, if you subscribe to my channel here or follow me on Facebook, you'll be able to see. Facebook is probably better because I can post content instead of this. Because YouTube, you gotta kind of wait till I start my stream. But on Facebook, I can just post content. I'm on Robinhood. I have American Airlines. Yeah, that's good. That's a good one. I got those too. Before the market crashed, those are the ones. It's okay. We'll be all right. I had actually got into this one down somewhere down. Wow. I got in down here and I sold up here and I got back in down here and I sold up again here and I bought again here and I sold here or $18 mark, whatever $18, 18 somewhere around here I sold. And Brown Eyes Miss. Sorry. I didn't read your name properly. Don't worry. I won't make that mistake again. But yeah, so I bought down here and I sold up here. And I thought that the market was going to keep going up. But that's when the crash happened. So it's all good, though. It's going to go back up. We're doing good right now. So we're in good shape right now. We are in good shape. This one right here was good for me. I like this. See? It went all the way up. Now it's pulling back. Just like I knew it was going to do. And if it come back down here, I'll buy more. Till then, I ain't got nothing to do with that. Fitbit. What's this one? Now, the reason why I bought this one is because I think it was Fitbit, right? Shoot. I think it was either Fitbit or... Yeah, Fitbit. So Fitbit was supposed to partner up with Google. That's why I bought Fitbit. Because I believe that they're going to partner up with Google. And Google's going to give them, I think, $2 billion or something like that. Let me see if I can find it. Let me see if I can find that. All right. So, I mean, obviously you can find some better information, but I don't want to waste too much of y'all's time. But I bought this one because Google and Fitbit is supposed to partner up together. You know what I mean? I think they're supposed to give them right? See, Google announced was buying Fitbit for $2.1 billion in November 2019. Come on, man. You don't find that kind of money on the floor nowhere. So I said, man, I ain't going to think twice. I'm getting in. So I got in. So they say I have until July 20th to allow. So what's the day? Oh, that's till next month. But hey, I was to get it now and hold. Like some stocks, I'm just gonna hold for the long run. Some of them, I'm just gonna buy and trade. So they're talking about $2.1 billion. Like buying Fitbit for $2.1 billion. I don't even know what's gonna happen. Let me see. Let me read this thing. They have till July 20th. Let's see. They got July 20th deadline. Because what's gonna happen is people are gonna see this, right? And when they see this, people are gonna load in that market, right? And so I'm glad I got it right here. Look at this. If regulators don't agree to pass a review, will trigger a 4-month investigation to buy wearable company's Fitbit for $2.1 billion. This is gonna be good. So this is a deal I'm just gonna wait for. Oh look, see, this is another reason why I like trading view. I didn't realize it was behind me. Yeah, this is gonna be good right here. Like I don't know what's gonna happen, but when this transfer is over, Fitbit gonna make your boy good. Patience is the key, man. Patience is the key. My profits are going down. Which one you in? What stock you talking about? I'll be back. All right. Should sell this. I actually kind of want to sell this because I noticed that it's damn. Why didn't I sell this? I wasn't paying attention at all. Damn, I should have sold this. Let me open that up. 1 second. Let me set this up real quick. Oh, that wait. This set for here. I'm gonna sell this at 113, man, because it's taking forever. Nah. I'll just wait. I'll just wait. I'll just wait. About MFA. Let's see what you're talking about. Hmm. This is recession. Everybody, bro. Right here is a sell zone right here. Actually, saying enough information. Let me Hmm. So, about this is your zone right here. So, if you sold it on this top area, then you're good. If you buy, you want to make. See, the saying is accurate because this is the 1 hour time frame, not the daily. See, the higher the time frame, the stronger the trend. See what's going on. If y'all got questions, man, y'all can feel free to ask. Don't worry, I'm listening. Let me see. Let me take a look. What's up? You want me to pull an image up and you want me to pull that up? Stream? I mean, I can if you want me to. I just didn't want me to.
Welcome to Yahoo Finance on the Move. I'm Adam Shapiro along with Julie Hyman. Markets are trading higher right now. The Nasdaq up over
All right,
100 points.
so
Dow is up about 170 points. S&P 500 is up 40 points. We are watching Jay Powell testify before the Senate Committee on Banking, Housing, and
oh
Urban
man,
Affairs
he
on all
testifying
kinds
right
of
now.
subjects, economic rebound,
What's going to
employment.
happen
Right
is
now, we are watching the senator from Arkansas, the Republican Tom Cotton, question the Federal Reserve Chair. Let's go back to the hearing.
hold on. Let me watch this real
The
quick.
ratings to 3 additional firms that had significant business in particular sectors. So it's not just the 3 majors; it's 3 others who are also considered majors for some purposes. But that
This
we
guy
understand
is
that
the
that
reason
does
why the
leave
market
some
crashed.
companies that don't have a rating.
So when he's done talking, I'm expecting the market to
these
shoot back
facilities.
up.
They're just in the process
Watch.
of opening. We're looking for an answer there. NAIC, of course, is not a national. It's not an NRSRO, and it hasn't traditionally been used in this way. So we're looking at some options for what to do there. I wish I could tell you we had an answer yet, but we're working on it.
So you haven't opened it yet, but you haven't foreclosed the possibility of trying to find some solution for this challenge.
No, we're still looking for a solution. Yes.
Any kind of time frame you can put on that?
Well, we actually talked about it yesterday, so we're working on it. I think soon, let's say. I mean, very soon.
I just want to stress again that there are dozens of companies have very strong balance sheets and employ tens of thousands of people across all of our states who, for one reason or another, choose not to go to a public rating agency, but are in many ways in the same position as a publicly traded company who would use these facilities. And I really hope that the Federal Reserve and the Treasury can find a way to treat everyone in an equitable fashion and protect as many of those jobs as possible as we try to open up our economy and get back to something more like normal. Mr. Chairman, I think I will yield back the balance of my time now, so I know we have a lot of people in the queue for questions.
Thank you, Senator Cotton. Senator Tester. Well, thank you, Chairman Crapo and Ranking Member Brown. I want to thank you, Chairman Powell, for your good work. I very much appreciate your steady hand at the wheel. I want to step back a little bit. The unemployment rate right now is 13.3%. I believe that's correct.
I mean, you put it in your omelet, remember?
Yes, that's good. And refresh my memory, at the peak of the Great Recession, when folks were bouncing off the walls around here because of a total worldwide financial meltdown potentially, we were at 10.6%, right?
And something like that. Yeah, it was in the 10.
So, and if you consider the fact, has been pointed out several times during this hearing, that the low wage workers are the ones that are really severely hit. I think you pointed it out in your testimony. And since we've got a lot of poverty in rural America, can you just give me a quick assessment if the programs that the Fed is doing is working in the areas that it's really needed? And look, it's needed across the country, of course, of the 13.3%. And that may be a very conservative figure, by the way, and you know that. But with unemployment where it's at, it's needed everywhere. But are we getting it to rural America?
We are. I like to think that we are through our support of the Paycheck Protection Program, through the Paycheck Protection Program liquidity facility. We've made that easier for small banks to use because they can then transfer their ownership interest in the loan fully to our facility, and it's off their balance sheet. That gives them balance sheet capacity, and it's gone, and they still get to keep the economics. So that should help, and it should also help borrowers because of that. Also, Main Street, Main Street is for larger companies, and some of those will be in rural areas.
So what about in particular, the ones that have really got trashed in my state are restaurants, bars, workout facilities, motels. Are we able to focus this money in any way to, say, the hospitality industry, because that's what they are, to really make sure that the money is going there? Because those folks are really, really, really in tough shape. I mean, tougher shape than, in agriculture, I can claim I've had impacts by COVID, but it has been nothing compared to the folks that are in the hospitality business.
And that's true across the country. But so they would have, if they have fewer than 500 employees, they would have been eligible for the PPP program. And there's still money left in that program, as I'm sure you know. In terms of what we do, any company that's eligible can borrow. We set terms of broad eligibility, and we're looking back to your financials the way they were pre-pandemic. So we're looking at 2019 financials.
Yeah. Is there any way to do any oversight to make a determination whether people that actually have been impacted are getting the money? I've been told by several businesses, hey, look, the money's there. I haven't really been impacted by COVID, but the money's there and it's literally free. I'm going to go get it.
Well, so it's interesting. So we haven't made any Main Street loans. We're just starting to do that, but we will certainly be looking carefully at what the population of loans is. And we haven't made any of the investment grade loans either because the market opened up wide open and lots and lots of companies borrowed, including the ones who had become so-called fallen angels and dropped below investment grade. So
let me approach something else and I know you don't concern yourself with debt as much in times of economic slowdowns as we're in today. Especially as one significant as this. But when Obama left office, the debt was $19.9 trillion. 3.5 years later into the Trump administration, we're over $26 trillion. Can you tell me, and you've got to be able to forecast this out a bit, can you tell me what that debt's impact is going to be on inflation and unemployment moving forward?
It's hard to say very specifically what it would be, but the United States federal budget has been on an unsustainable path for years now. That just means that the debt's growing faster than the economy. So debt to GDP is rising. That is by definition unsustainable. And what really happens is over time, future generations, our kids and our grandkids, they'll be spending their tax dollars will be going to servicing the debt that we incurred to buy the stuff we wanted when we were in charge or when we were, adults in America these days. And, every generation should is entitled to spend what it wants to spend on the things it thinks it needs, but it really ought to pay for them in some sense, rather than passing the bills on to the kids. It just in very simple terms. So that's really the longer run issue is one of generational equity. The U.S. has a lot of fiscal and borrowing power. We're the world's reserve currency. We have the world's best economy, the most vibrant economy, best institutions. So, we can borrow a lot, but I think we need to get back on a sustainable path. I will close up by saying, though, that the time to work on that hard is when the economy is strong, unemployment is low, there's growth. That's when you want to work on that. Those concerns are always going to be there, but I wouldn't prioritize them at a time like this, when the spending is what it's doing is it's giving us a better economy going forward, which will really help service the debt.
I agree with you. In just a statement, we should have been prioritizing that before the economy collapsed, like 2017, 18, and 19, when we were borrowing $1 trillion. Thank you, Mr. Chairman.
Thank you. Senator Rounds.
Hey, good morning, Mr. Chairman. I just I want to go back a little bit. Earlier in the pandemic, I joined a letter with Senator Warner to the Treasury regarding mortgage forbearance and liquidity that were concerns for mortgage servicers. Thankfully, the uptake on the forbearance programs has been modest, though there is still some concern about an increase in mortgage forbearances and the need for the Fed to establish a liquidity facility for mortgage servicers if economic growth stagnates in the coming months. My question is, do you foresee the need for a servicer liquidity facility in the near term, and what kind of warning signs would you be looking out for to indicate that need if you have an interest?
So the housing regulators and the Treasury really have the lead on that. We were worried. I'd say we were more worried a couple of months ago about stresses building up, just as you described, than we are now. The stresses have moved down a little bit. Of course, we'll be monitoring that carefully. But as of right now, it doesn't look like there's a need for such a facility.
Thank you. The Fed has said that results of both the CCAR review and the DFAST stress tests will be released on the 25th of June. Considering the importance of understanding how the Fed views the responses of banks to the COVID-19 pandemic, this is highly anticipated. This is one that we're looking forward to, and I think there's some anticipation with the release of that information. I've also been closely tracking the Fed's integration of stress test results with non-stress capital requirements in the stress capital buffer. My question is, can you tell us more about what the Fed will be releasing on the 25th, and whether or not that will include a disclosure of the Fed's COVID analysis and stress capital buffer requirements?
Yes, I believe it will. And of course, we're just in the process. That's 9 days away, so we're just working on that now.
Okay, and after the release of the CCAR and the DFAST results on the 25th, what comes next? Will banks have to resubmit their capital plans or conduct additional stress tests? Is that the anticipated response that you're looking at, or have you gotten that far yet?
Again, we're making that announcement on the 25th, and
which platform do you use to analyze?
Of course, 9 days before that, we're actively engaged in.
I mean, you can either use the platform that you have, like this is my bank, or TradingView.
Okay.
TradingView is real good.
Let
I
me
love
run along
TradingView.
just a little bit different route here, Mr. Chairman. Given the length of time that we'll be in a low interest rate environment, I think it's worth it for the federal government to consider.
Y'all don't forget to press that follow button and that like button, y'all.
With maturities that are
Show y'all
beyond the
boys
10 or
some
30
love.
years that is typical for today. In the past few years, the UK, Canada, and Italy have sold 50-year bonds, and Austria, Belgium, and even Ireland have sold some sovereign bonds with 100-year maturities. Is this something the United States should consider, and would the Fed consider buying ultra-long treasuries?
So that is an issue that is squarely in the province of the Treasury Secretary and his colleagues at the Treasury Department. As you know, Secretary Mnuchin looked very carefully at longer and longer maturities earlier in this administration. And again, it's not something that the Fed really plays a role in deciding.
Very good. Thank you, Mr. Chairman. I'll yield back.
Thank you. Senator Warner.
Thank you, Mr. Chairman. And it's
What happened?
You're watching Yahoo Finance. We will be right back with more on the Senate hearing right after this.
A long time ago. I'm about to buy some Zura. Mhm. I might buy some Zora at 12.10. Let me zoom in a little closer.
Welcome back to Yahoo Finance on the Move. I'm Adam Shapiro along with Julie Hyman. We're watching markets trade higher as Federal Reserve Chair Jay Powell testifies before the Senate Banking Committee. We're going to go back to that hearing right now.
and if we could provide these institutions with proper resources, they could not only be an important component of fighting the economic inequality that, again, I appreciate you making your comments about racism at the end of your opening comments, but also about seeing the kind of economic renewal that that we so desperately need in this part of America. Now, I've been working on a proposal with Senator Booker and a number of other my colleagues that would provide direct private and public money into CDFIs and MDIs as part of a longer term strategy to rebuild the LMI communities and foster economic growth. And while the direct equity infusions we're talking about would be more a treasury directed investment, we're also looking at a TALF-like facility that would have a Fed role, not to have loans forgiven, but a TALF-like facility where there would still be investment from Treasury, there would still be retention of some of the obligation from these institutions, but by helping to clean up the balance sheet of some of these entities, that would dramatically increase liquidity, which again, we could do equity and then also clean up some of the balance sheets. I think there'd be enormous value here. And I think this is completely consistent with the Fed's mission to achieve maximum stable employment. And that maximum stable employment is obviously a mandate that extends to all communities. And as so many of my colleagues and you have acknowledged, the persistent economic disparities that we have in our country just has to be dealt with. The protests on the street about criminal justice, but they are about long-term chronic economic disparities. So I would just ask you, Mr. Chairman, as we roll out this plan, that you and the Fed, within the bounds of your authority, would really lean in, let's stretch, expand the envelope a little bit because I think we really have an opportunity and obligation to make sure that these institutions are better able to be part of a recovery. And if you make a quick comment on that, I'd appreciate it.
Be happy to take that. As you know, and as we've discussed on other occasions, that 13.3 facilities are supposed to be programs of broad eligibility. We don't tend to target particular beneficiaries, but rather broad institutions, and anyone who meets the sort of requirements can take part in the facility. But subject to that, I'm very happy to take a look at this idea.
And I know my time's out, but I just point out when we've got 40% of Americans who are making less than $40,000 a year out of work, disproportionately in LMI communities, I think that is a broad-based problem that the country has to address. Thank you, Mr. Chairman.
Thank you. Senator Perdue. Is Senator Perdue with us? We'll move on until he gets back then to Senator Tillis.
Thank you, Mr. Chairman. Can you hear me?
Yes.
Yes.
And thank you, Chairman Powell, for being here. I just heard an echo. I think I've corrected it. I'm kind of curious. I know that Vice Chair Quarles a while back talked about adding additional elements to CCAR stress testing, and some of that I'm sure is just a natural evolution of what you're learning about what works and what doesn't work within CCAR. But I've heard more recently that they're going to add on another layer that's specifically focused on the circumstances we found ourselves with COVID. And one of the concerns that I have with that is, number one, I think that the banking institutions with about twice as much capital as they had after the financial crisis, that we could arrive at a point with the results of these stress tests to where we're actually going to increase their capital requirements. And that seems to me to be at odds with us relying on the banks to get out there, help families and businesses, provide capital, and support financial intermediation. So a part of what I'm asking is, if we're going down this path, are we working with the banks to really think through the cost benefit of this particular additional regimen added to the stress testing? And are we potentially at risk of increasing capital requirements at the worst possible time?
Senator, as I mentioned, we're just in the middle of making those decisions and carefully reviewing all the materials. So I'm just going to have to say I hear you. I hear your comment loud and clear. We'll probably a discussion for us to have after we make the announcement we're going to make on the 25th. We as we mentioned publicly, we're doing sensitivity analyses, which seems like the right thing to do. You're also right that we're not looking to have our capital requirements be pro-cyclical, but in terms of the actual results of the test and things like that and what we're doing, I think I should just leave it at that.
Okay, thank you. And by the way, on looking forward to future announcements, like Chairman Claypo, I'm looking forward to a future announcement on inter-affiliate margin. I understand that the regulators are on board. Do we have any idea of when we would expect action on that? I've been expecting it. I understand that it's imminent. Do you have any read on when we're going to see that?
What's up, Nico? What's up,
that's
bro?
all I know is that it's soon. I wish I could be more specific, but that's what I'm told is soon.
Well, to be fair, I know that that's cuts across several lanes, but it's been soon since about September of last year. So I hope it's getting to be sooner.
Yes,
I have another question. And thank you. I know you agree. I know I think it was last week, Mr. Chairman, that you said the FOMC is not even thinking about raising rates. I think you went on to say that they're likely to stay at zero between now and through 2022. That feels like forward guidance that this policy is anchored in the calendar rather than FOMC goals. So I'm curious I think it was in that setting that you didn't make any mention of yield curve control. And I was curious, was that just not right for that particular discussion, or do you believe there's not a place for yield curve control in this dialogue?
So I did say that we're not only not thinking about raising rates, we're not thinking about raising rates. That's what I said. I didn't mention the end of 22. What that came out of, Senator, was the summary of economic projections showed that overwhelmingly committee members
Not much,
didn't
man.
see the likelihood under the current expected path of raising rates at least through the end of 22. And I didn't mention yield curve. I talked about yield curve yield curve control in the press conference, but I would just echo what I said earlier to Senator Toomey, which was this was a briefing on the historical use of yield curve control by the United States, actually, during World War II and then after, which led to the Fed Treasury Accord, and also on some current usage by the Bank of Japan and the Reserve Bank of Australia. Really, it was just to acquaint the committee with what it is and why some other central banks have used it. We haven't made any decision to go forward on that. It just was. It's a tool. The same way we've looked at negative rates repeatedly, we look at negative rates, but in the case of negative rates, we've pretty much decided that it's not something we think is attractive for us here in the United States. And yield curve control was more just let's educate everyone on what it is and then decide whether we think it might, under some circumstances, be useful.
Thank you. Mr. Chair, the only thing I'm going to submit maybe a question for the record about what financial policy we should be pursuing for what I consider to be the donut hole, travel, leisure, hotels that were first into the crisis. They're going to be the last out. I don't believe the Treasury has the authority that it needs to come up with a facility for them, but I think it's critically important. Thank you, Chairman Powell. Thank you, Chair Crapo.
Thank you. Senator Warren.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here with us today. We're facing an economic crisis that has devastated millions of families and small businesses across this country. 2 weeks ago, many people celebrated the latest job numbers, which showed a dip in the overall unemployment rate. But we're not going to be able to build a successful recovery if we don't understand the scope of the problem. So I wanted to dig into the numbers just a little bit today. Chairman Powell, are jobs coming back at the same rate for both Black and white Americans?
Are they coming back at the same rate? No, actually. I think the answer to that is no. I'd want to check that, but I believe that the Black unemployment rate did not come down as much as the white unemployment rate.
In fact, Chairman Powell, you might want to look at the numbers. I was going to say, as I understand it, white unemployment fell to 12.4%, while Black unemployment actually rose
ticked up
16.8%. Is that right, Mr. Chairman?
You know, the tenths numbers, I would have known that the day after the report, but yes, in principle, that's right.
Got to finish the trading day out. All right, bro.
And it went up slightly for Black Americans.
That is
all right, man. Thanks for stopping by, bro.
So back in March, Congress passed a temporary expansion of the unemployment insurance program. Now we're only a few weeks out from that help just running out. Some people in Congress want to let that help expire. They're saying,
I'll catch you
mission accomplished.
Later, man. All right, bro.
Mr. Chairman, you noted that the unemployment rate is higher for Black Americans, and now we've just said it's actually increasing. If Congress lets unemployment insurance benefits expire, which families are going to find it hardest to pay their bills, to make rent, or to afford groceries?
Well, the unemployed, which consists, people who have lost their jobs lately here are minorities are well overrepresented in that group, as are women.
So let me just ask, Mr. Chairman, this crisis has been hard on millions and millions of Americans, and I know you've been thinking a lot about this issue. So I just want to ask you directly, is it accurate to say that our economy is healthy when there are serious racial gaps in how Americans are doing?
I think that's a longer run weakness in our economy. You know, even when our economy is healthy, we have longer run issues, and that is one that has been with us for a very long time.
So I take it you would describe this as not a healthy economy?
That is not a healthy feature of our economy now or ever.
Thank you, Mr. Chairman. I appreciate your focusing on this issue. This crisis has hit communities of color the hardest. They have faced the biggest decline in employment, and they have faced the largest proportion of deaths from COVID-19. The minute jobs start recovering for white Americans, we can't just say that the problem is fixed and start cutting off help for people who are out of work. Senate Republicans are eager to let this help expire when we still have more than 20 million people out of work and the unemployment rate is going up for Black Americans. Inequality is not something that happens on its own. It is the result of policy choices, who we decide to help and whose pain matters. Congress can help those who need it most by reauthorizing expanded unemployment and by doing it now. Thank you very much, Mr. Chairman. I appreciate your being here today.
Thank you. Senator McSally.
You are watching Jay Powell testify before the Senate Banking Committee. This is Yahoo Finance. We're going to check markets, which are still trading higher right after this. Welcome back to Yahoo Finance on the Move. Markets are trading higher off of the session highs, but still well into positive territory. We're going to go back to the Senate Banking Committee hearing at which Jay Powell is testifying right now. The senator asking questions is Republican from Arizona, Martha McSally.
Tourism, all that has been really hit hard from this and really concerned about their slow recovery. So what are you seeing in this sector and unemployment and consumer spending? And is there anything within your agency's authority to help this, or are you going to go back to just the overall facilities or anything? This is a very specific sector that's been hit hard with lack of tourism and travel.
Yeah, very, very hard. It's airlines, any kind of travel, it's hotels. Obviously, it's any business that depends on getting people together in tight groups and either feeding them or flying them around or putting them in rooms and things like that. All of those companies, bars, restaurants too, retail too, they're all really feeling this. And there's no question about it. And that's, by the way, that's where a lot of the layoffs are in those service industry companies. And so, what we've done is we've created these facilities and they look back to the financial performance of the potential borrower before the pandemic. So if you were in reasonable financial shape before the pandemic, then in principle, you can be an eligible borrower. We're not going to look at what happened to you because of the pandemic. And that's really the way we've approached that.
Great, thanks. Okay, on a different note, on page 6 of the Federal Reserve's Monetary Policy Report, there's a graph that shows unemployment rates among several demographics. So it includes African American, Hispanic, white, Asian. We have 22 Native American tribes in Arizona that have been, in many cases, very hard hit by the pandemic. It's about 300,000 individuals. It's a pretty significant percent of Arizona. Is your agency tracking any data specifically on Native Americans? And if so, what are you finding? And if not, will you commit to helping with this important community that needs help right now as well?
So we do keep very good track of all that. In particular, the Federal Reserve Bank of Minneapolis has a real specialty in that area, and we'll be happy to work with you on that. It's something I don't have the numbers on the tip of my tongue, but it's very much a focus for us.
Okay, great, thank you. And just to wrap up, Chairman Powell, what's your level of optimism? Arizonans are struggling. They're getting back to work safely. We're still having to manage this pandemic. What's your level of optimism of the recovery going forward?
I would just say long run, don't sell the U.S. economy short. Long run, I am confident that we will have a full recovery. I'm confident of that. I think that
Welcome back to On the Move. I'm Adam Shapiro along with Julie Hyman. We're going to head back to Washington, D.C. and the hearing with Jay Powell testifying before the Senate Banking Committee.
Reconsidering it. I don't think this has really changed thinking on that. Inflation, the thing about inflation is that there's been sort of downward pressure on inflation around the world for a couple of decades. And so what the models would have called for, with big deficits, they would have called for higher inflation, would have called for higher interest rates. We don't see either of those things. So I think we're not working on the hypothesis that higher inflation is a likely outcome. Of course, we know what to do if there's higher inflation, but really, at least in the near term and as far as we can see, what we see is a short run in inflation.
Thank you. In your modeling, what assumptions are you making about COVID rates over the next several months?
We look at different scenarios. We look at a wide range of different scenarios. So we model, a scenario where there's a second wave, and we model a scenario where the kind of baseline scenario, which is that essentially COVID rates come down over time, and there may be regional outbreaks and that kind of thing, but we don't have a sort of second wave at the national level. We look at different scenarios.
Can we drill down on that? We can take this offline, and I'll issue a question for the record. But it seems to me that the data changes day by day, and one of the things that you said in earlier testimony was that a lot depends on COVID rates. I mean, we can tweak fiscal and monetary policy, but a lot of this does depend on what's happening with the virus. And I'd like to understand what are your inputs, just as we consider our fiscal policy. And finally, I wrote you a letter asking you to suspend dividends. And you said you're conducting sensitivity analysis of current conditions to decide whether to suspend dividends. And I'm wondering why you're conducting an analysis only of current conditions and not testing whether banks can handle a serious adverse scenario going forward, since that's quite likely.
Actually, that's exactly what we're doing. That question is one that's at the heart of our stress testing, which is about future highly stressful scenarios. And so that's precisely what we're in the middle of doing.
And what's your time frame for a decision on the suspension or not of dividends?
So we'll be announcing the results of the stress tests on the 25th of June.
Thank you.
Thank you.
Thank you. Is Senator Kennedy back with us? Senator Moran. Are you with us, Senator Moran? Senator Kramer.
Hi, Mr. Chairman. Thank you. I'm happy to step in. And Chairman Powell, thank you for being with us today. You and I, in the past, have talked a couple of times about my concerns about BlackRock having such a central role in facilitating the financial support of businesses that are approved as part of the CARES Act. And specifically, the concerns I'd raised, of course, were relevant to the potential of investment in energy industry, particularly the oil and gas industry out in my state of North Dakota, and what it seems to me to be an excessive standard that they've applied in terms of climate and whatnot. And that's just one factor, and you and I have had a good discussion. You've, of course, assured me of their limited role in all of that. However, in recent days or weeks, I've become even more concerned about that standard, their standard of climate investment, with a different standard for foreign investment, particularly Chinese companies and companies that don't meet the same enforcement demands, that don't have the same accountability and transparency, particularly with the PCAOB for the public companies. And it's an issue that caused Senator McSally and I to send a letter yesterday to the CEO, Larry Fink, to get a better understanding of their strategy as a company in light of what appears to be what I think, again, is a double standard in the way they treat investment in Chinese companies versus Americans. And so in light of the deference that BlackRock appears to provide the Chinese Communist Party, as well as the radical environmentalist active investors, should I be concerned about their role in the CARES Act? And can you give me some assurances that this part of BlackRock won't impact the public's funds and the public's interest in keeping our particularly oil and gas industry vibrant and the important national security that they provide?
Senator, I would say there's no reason for you to be concerned. They play an administrative role. We set all the policy decisions, and our facilities lend only to U.S. companies. So they're just our agent in this, and they bring particular skills that we don't have and that they do have. And so that's really what this is about.
I appreciate that assurance. I'm sure they're listening as well, and I hope that the regulators are paying attention. We have obviously a lot of work to do as well on our side to make sure that we create a standard that protects America's investment in those same companies. So I appreciate, again, your assurances. And with that, I'll yield the rest of my time.
Mr. Chairman, this is John Kennedy. I'm on now.
Thank you, John. We're going to go to Senator Van Hollen next, and then you will be next after that.
Thank you, sir.
Senator Van Hollen.
All right, you're watching the Senate Banking Committee hearing with Jay Powell. As you heard, Senator John Kennedy is on deck. When we come back, we'll go back to the hearing. The Dow, NASDAQ, and S&P 500, all of those indices are trading higher, up more than 1.5% each. We're going to go back to the Senate Banking Committee hearing at which the Federal Reserve Chairman Jay Powell is testifying. Right now, questioning the chair is the senator from Nevada, Democrat Catherine Cortez Masto.
For our facilities is welcome to borrow. And that's really what the tool that we have. We can't, we do, as I like to say, we do lending, not spending. We can lend to solvent borrowers who can service a loan, and the servicing requirements are not terribly strict. We look back to last year's pre-pandemic financials to see if you're qualified. We don't look at we're not going to disqualify companies because they've been affected by the pandemic. So that's really what we have to offer.
So, and I've heard this before, and I'm just curious because this is something I'm hearing also in my state. Could the Federal Reserve take a stake in a company to mitigate potential solvency problems?
No, we can't do that.
Okay, thank you. That helps clarify. Let me ask you this. We also know that government job losses totaled about 1.5 million in the past 2 months, and there are more on the way. The National Governors Association requested $500 billion in aid to state and local government. They sent it to Congress requesting that aid. And without aid to state, what levels of unemployment would the Fed predict?
I don't have a specific projection, but states, effectively all states, have a balanced budget requirement. So what they do when they see revenues drop and costs rise, which is what we're seeing now, what they do is they lay people off. They cut essential services. So and both of those things can weigh on economic activity, in addition to the human cost of those things. So, we don't play a role in advising Congress on specific fiscal policy, but I do think that state and local governments they're major employers and they provide essential services, and that's certainly an area that's worthy of your interest.
And I know my time is running out. Let me ask you this one final question, and the rest I'll submit for the record. But would the Fed consider making changes to the municipal liquidity facility that make it more like a grant and that would be able to provide more assistance to local governments?
You went out for a second there, but on the municipal facility, we've repeatedly made adjustments. If you've got a specific adjustment in mind, I missed it.
Yeah, turn it into a grant. Can you turn it?
We can't do that. No, we can't make grants. That's one thing we can't do. We can only lend. The law is extremely clear on that. It's you who can make the grants. It's Congress that can do that, as you did with the PPP program.
And if Congress were to go down that route, would you have concerns about that?
If Congress wants to make grants, that's entirely Congress's business.
Okay, thank you very much.
Thank you. Senator Kennedy. You need to unmute, Senator Kennedy.
Okay.
There you go. We got you.
You got me? Okay. Mr. Chairman, both Mr. Chairman, I apologize for being late, but I was in another hearing. And if these questions have been asked and answered, if you could just give me short answers, I'd appreciate it, because I don't want to belabor this. When will the Main Street lending program be ready, Mr. Chairman?
It's open now for lenders to register, and once they're registered, they can start making loans, and we encourage them to do so. And then the facility will be within a week or so will be open to receive those loans.
In terms of demonstrating credit worthiness, have you made a decision about using rating agencies other than the big 3 or 4?
Yes, we have, Senator. We've looked carefully at all of the rating agencies, the NRSROs. We've admitted 3 additional ones the criterion really was that do they have a record of significant experience and usage in the private sector so that investors rely on them. And the answer is there were 3 in different areas who had that, so we added them.
Have you made a decision about the minimum amount of the loan?
We have. We've lowered in Main Street. We lowered it to 250,000. Yes, and we're carrying that over into the nonprofit part of Main Street.
Okay, I think that's a positive development. How big is the Federal Reserve balance sheet right now, Mr. Chairman?
Just a touch over $7 trillion, I believe.
How was it? How big was it at the end of December?
Low 4s, low $4 trillions.
Okay. How long do you think it'll take to reduce the size of that balance sheet to some amount that's not otherworldly?
That's an interesting standard. So I think when the time comes and the crisis is over and we're not purchasing assets at this kind of pace, what we'll do probably, and that'll be some time out. But what we'll do is what we did in 2014 to 17 that really worked was we just froze the size of the balance sheet. And then as the economy grows, the balance sheet shrinks as a percentage of the economy. And that was a very peaceful period during which people weren't worried about the size of the balance sheet, but it declined from, 25% to 17% or something like that. That's some years away, but this is probably the way we'd start.
Chairman Crapo, I can't see the clock. How much time do I have left?
You have 2 minutes.
Okay. Mr. Chairman, none of us can predict the future, of course, but in our economy is estimated to take a real hit this year, as you well know. The intelligence unit of The Economist says that we're going to have a GDP drop this year of about 4%. But they're projecting Europe's going to be even worse. They're projecting about 9% for Great Britain, 9% for France, I think 6% for Germany. Can we recover if the European Union, one of our biggest trading partners, takes much longer for themselves to recover?
So a weak global economy, weak European economy will certainly weigh on U.S. activity. They're a great area for exports and trade of all kinds, and also Europeans come and spend money here on tourism a lot. Being here in Washington, we see that all the time. So yes, weakness around the globe actually does does hurt the U.S. economy.
Okay. Thank you, Mr. Chairman. I want to yield back my time since I went way over at the last hearing.
You're a gentleman and a scholar. Senator Van Hollen, are you here?
A moment of brevity at the hearing with Jay Powell before the Senate Banking Committee. You're watching Yahoo Finances on the Move. We're going to be right back after this, and we will check markets. To Yahoo Finance, markets are trading higher as Jay Powell testifies before the Senate Banking Committee. Let's head back to that hearing.
That make life tougher for them.
So measures that we can keep people on the payroll, make sure that they have, and I know this has been a concern from folks that there is no incentive to stay off the payroll, but some transition to where we can provide incentives to get back on payrolls, to get back to work. You would favor that, I assume.
We don't take position on particular aspects of fiscal policy, but I would say this: there's going to be a lot of people going back to work in coming months, but there are going to be a lot of people who can't because if they work in Nevada, for example, as we were just discussing, in the travel and entertainment industry, these aren't going to be jobs. So it's going to be a while. I think some form of support for those people going forward, in my view, is likely to be appropriate. During the Great Recession, I think unemployment assistance was reauthorized on a number of occasions, and it just is not only can they not go back to their old job, but there are no jobs in that industry, and it's just really tough for them, for at least for a period of time to give them support, and balance that with incentives to get back to work.
Thank you. A similar question with regard to the minority communities, with regard to businesses. Minority business owners face enormous risk as it is, even before this pandemic started. So the same question, what are the downside risks for our minority businesses if overall business aid is not extended by Congress?
I think we, as I mentioned during my opening remarks, the small businesses of America, that's where the jobs are created on net. And, we don't want to, business people are going in and out of business all the time, but what you don't want is a wave of avoidable insolvencies, which will weigh on the economy for years. And that's all the more so true of minority businesses because of the important role they play in our economy and in their communities.
All right. And finally, again, focusing on minority communities. If renters and homeowners are not helped with extended eviction moratoriums, what effect will that have on our minority communities in America?
So evictions and foreclosures and things like that have well-documented negative impacts on people's lives. I think during a pandemic, which is still ongoing, it's particularly important because you wind up sleeping in somebody else's basement or in a shelter or something when that happens. And it's not a good time for people to be. If there are ways to avoid that, keep people in their homes while the economy recovers and while the pandemic is dealt with. That I think those are things well worth looking at.
Great. Thank you, Mr. Chairman Powell, and thank you, Chairman Crapo.
Thank you. Senator.
We're going to head back to this hearing right after this break. You're watching Yahoo Finance on the Move.
Demand for that paper from the Treasury doesn't come back, though, in coming months. What's the longer-term implication for interest rates? I know you're reticent to give any forecasts on interest rates, which I understand, but just give us a tone.
1.8%. The S&P also up that amount. The NASDAQ is up 1.7%. We've had David Perdue, Republican of Georgia, who has been questioning the Fed chair. Let's listen back in.
Particularly in times of people want to own U.S. Treasury obligations, and so that's been the way that is for a long time now. Even if some of the problems, as in the last crisis, a lot of the problems originated here. Notwithstanding that, people wanted U.S. Treasury, and that's because we have the strongest economy and the best institutions, most liquid markets.
I have one last question. I'll yield my time back. You've been very gracious with your candor and your time today. I've heard a conversation here in this hearing about labor, and I hear all over my state right now. Our state was one of the first ones to reopen, and one of the inhibitors to supplying the demand that I think is out there, and I think we're proving that, is getting people to come back into the workforce. And so we know that the premium on the unemployment structure is creating a disincentive. And I want to make sure that we protect the people that need to be protected. But how do we incent, in your opinion, the people that need to come back to the jobs that are sitting there? I mean, we have a number of, in Georgia anyway, a number of job openings that are just going unfilled because people aren't coming back yet.
I know that's something you're going to be considering as the enhanced unemployment insurance program runs out at the end of July. I wouldn't presume to to tell you what the Fed thinks you should do, because it's really not our role. I do think you'll want to continue support for workers in some form. I think there are going to be an awful lot of unemployed people for some time, even though, if, again, we have 25 million newly unemployed or partially employed people. And even if we start putting people back to work really fast, which may happen here, there's still going to be plenty of people who don't have jobs, and they may not have them for a while because there are no jobs in travel, accommodation, various places. So I think it's, and I know there are a lot of interesting ideas being thrown around out there. So, but I think something will likely wind up being appropriate there.
Thank you, Mr. Chairman. Thank you, Chairman Crapo.
Thank you, Senator Smith.
Thank you, Mr. Chair, and thank you, Chair Powell, for being with us today. It's nice to see you again. So we are more than 3 months into the economic crisis that was caused by coronavirus, and more than 2 months through the passage of the CARES Act, which provides urgent and emergency support for families and for businesses and for healthcare systems. And I think we all know, and you have acknowledged yourself in your opening statement, that COVID is not the great equalizer. In fact, it hits hardest those who are already struggling because they don't have a safe, affordable place to live, because of lack of access to health care, because of low wages and chronic poverty, and especially, I think, the generational impacts on Black and Brown and Indigenous people for the systemic racism that limits their freedom and their opportunities and even their lives. So I think that in this moment, it is essential that Congress takes up this challenge and fulfills the promise of America for for racial and economic justice. And I want to just have a chance to talk with you a little bit about this, because I think there's a rising narrative. We hear from some, including the president, that things are improving, we need to reopen the economy, and before we know it, we can all get back to normal. But what I am so worried about is that we're burying our heads in the sand when it comes to, one, the virus's continuing spread, but also that we're looking away from the disparate impacts that COVID is having, and that in fact, if we're not careful, if we don't change the way we're doing things, we won't get back to normal. We'll get back to a worse normal, a normal that exacerbates these inequities. So let me just focus, if I can, on the question of housing and rental housing in particular, because this is something that I see a bad trends on in Minnesota. The Star Tribune, my hometown newspaper, recently published an article analyzing what is happening with rent collections in the Twin Cities. And it found that 95% of Class A apartment buildings, so the expensive ones, where the people who have a lot of money can live, 95% of those renters are making their rent payments. But only about 88% of renters in the affordable apartment buildings, the older ones, are able to make their rent payments. So I think we can see that, of course, it always helps if you have more money. We're seeing the impact of this on low-income people. And also, I think we're probably seeing the impact of extended unemployment insurance and other help that we provided to make that 88% number not be even higher. So let me ask you, Chair Powell, about this. I know you don't want to comment on specific proposals, but what would be the impact on the housing market, especially the rental market, if Congress doesn't provide some sort of long-term rental assistance to people? What would be the impact of that, do you think?
Well, I think if people, for example, get evicted or foreclosed upon and things like that, their ability to get back in the labor market becomes very challenged. And just from a human, there's a sort of a moral issue and also an economic issue at this particular time, because of the likelihood that we'll have a fairly large population of people who are not able to go back to their old jobs or even to find a new job in their old industry. So I just think those are things worth considering as you think about what support to provide.
Yeah. And Chair Powell, would you expect that if that were to happen, that would also put incredible pressure on the landlords, sometimes public-private partnerships that own these affordable housing units, because they then lose their revenue stream in order to keep those buildings up and running. Would you agree with that?
Yes, and you could see pressure on the ownership as well.
And would you see also that given, like, this is, I think, sort of a stunning statistic from my home state, only 25% of Black families in Minnesota own their own home. The number is 76% of white families. So would you agree that this would, if we did see a surge of evictions, if eviction forbearance, for example, expires, we don't take additional action, that this would end up exacerbating the racial inequities that we see in our economy right now?
Yes, it would, and I think this pandemic, the way it hits our economy, the way it hits the service economy particularly, has been a real inequality increaser for the reasons we discussed earlier. That those are the people losing their jobs are to a large extent service economy employees with relatively low wages and relatively high percentages of minorities and also women. And that's who's bearing the brunt of this.
Right. Well, I think this makes the case for why it's important that we continue to see what we can do to extend rental for eviction forbearance, but also it makes the case, I think, for why the bill that Senator Brown and many others of us are working on to provide $100 billion in emergency rental assistance so that these families don't have to lose their housing, therefore making it so much more difficult for us to recover, and also exacerbating these fundamental and systemic inequities that we see in our economy overall. Thank you, Chair Powell.
Thank you. Senator Moran.
Mr. Chairman, thank you. Mr. Chairman, thank